Right now, somewhere between Shanghai and Los Angeles, a ship the length of 4 football fields is crossing the Pacific Ocean. It is carrying 14,000 shipping containers stacked 9 high above the waterline. Inside those containers are televisions, sneakers, furniture, smartphones, toys, clothing, and thousands of other products that will end up on shelves in American stores within the next 3 weeks. The ship burns 120 tons of fuel every single day. It has 25 crew members aboard who eat, sleep, and work on it for months at a time. It pays fees to every port it enters, to every canal it crosses, to every inspector who boards it, and to every pilot who guides it into harbor. And it earns its owner approximately $85,000 every single day. Before expenses. Today I am going to break down exactly what it costs to own a cargo ship, what it earns, how the money flows from the moment a container is loaded to the moment a freight payment arrives in the owner's account, and whether there is any version of this business that is accessible to someone who does not already own a shipping line. The answer to that last question is going to surprise you. Drop a comment right now. What do you think it costs to build a new cargo ship from scratch? Take a guess. Drop the number. I check every comment on this channel. Welcome back to Richhabits. Subscribe if you are new here. And look. If you think global shipping has nothing to do with your financial education, go scroll TikTok and keep buying products without understanding the economics of how they got to you. Or stay here for the next 15 minutes and learn an industry that moves $14 trillion worth of goods every single year and is more relevant to your daily life than almost any other business on earth. Still here? Then let us start where every cargo ship starts. At the shipyard. The cost of building a cargo ship. The first thing to understand about cargo ships is that they are not one thing. There are multiple types of cargo vessels, each designed for different cargo, built at different costs, and earning revenue in completely different ways. The most common types in 2026 are container ships, bulk carriers, tankers, general cargo vessels, and roll-on roll-off ships. Each has its own price range, and understanding the differences is what separates someone who knows this industry from someone who just knows the word shipping. Container ships are the most recognizable cargo vessels on Earth. They are the giants you see in port news footage, stacked high with colorful metal boxes. In 2026, a small feeder container ship carrying between 1,000 and 3,000 TEUs, which stands for 20-foot equivalent units and is the standard measurement of container capacity, costs between $1.6 million and $44 million to build new. A mid-sized vessel carrying between 3,000 and 10,000 TEUs costs between $40 million and $120 million. And the ultra-large container vessels, the megaships carrying 15,000 to over 24,000 TEUs that dominate the major Asia to Europe and Asia to America trade lanes, command prices that routinely exceed $200 million in 2026, with modern LNG-powered vessels reaching approximately $267 million per ship. To put that $200 million figure in perspective, it is more than the GDP of some small Pacific Island nations. It is more than the sale price of a Picasso painting. And it is an investment that a single company might make 20 or 30 times over to build a competitive fleet. Bulk carriers, which carry dry goods like grain, coal, iron ore, and minerals in open holds rather than containers, are simpler in construction and significantly cheaper. The largest bulk carriers in the Capesize class cost approximately $60 million to build, roughly half the price of a comparable container ship. A mid-size Panamax bulk carrier runs between $30 and $50 million new. Tankers, which carry liquid cargo including crude oil, refined petroleum products, and chemicals, are more expensive than bulk carriers due to the reinforced double-hull construction required by international regulations and the complex safety systems required for volatile cargo. A large crude oil tanker costs between $80 and $120 million new. Specialized LNG tankers, which carry liquefied natural gas at temperatures of -162 degrees Celsius, require extraordinarily complex cryogenic technology and cost approximately $190 million per vessel. Used vessels are significantly cheaper. A 5-year-old Panamax bulk carrier can be acquired for $30 to $50 million. A 10-year-old container ship in the 10,000 TEU range was selling for approximately $68 million in 2024. A small used general cargo ship can be found for as little as $5 million. Construction timeline for a new vessel runs between 12 and 36 months from order to delivery depending on the type and complexity of the ship. Major shipyards in South Korea, China, and Japan dominate the global order book, and as of 2026, Tier 1 yards are booked years in advance due to the surge in green fleet renewal orders. Asterisk the cost to operate a cargo ship. Every single day now here is where the economics become genuinely confronting. Because buying the ship is only the beginning. The ongoing cost of operating it is what separates profitable shipowners from those who, as the industry saying goes, start with a large fortune and end with a small one. Ship operating costs fall into two distinct categories that maritime accountants treat separately. The first is OPEX, which stands for operating expenditure, and covers the fixed ongoing costs of keeping the vessel in safe, seaworthy condition regardless of whether it is carrying cargo or sitting idle. The second is VOYEX, which stands for voyage expenditure, and covers the variable costs that are specific to each individual voyage including fuel, port fees, and canal tolls. Starting with OPEX. A standard Panamax container ship has annual operating costs of approximately $9 million. That is roughly $25,000 every single day, rain or shine, whether the ship is crossing the Pacific or anchored off the coast of Singapore waiting for a berth. Here is exactly where that money goes. Crew wages and travel are the largest OPEX item after fuel. A typical international cargo ship carries between 20 and 30 crew members including officers, engineers, deckhands, cooks, and electricians. Total crew costs including wages, benefits, travel to and from the ship for crew changes, and training run between $15,000 and $30,000 per month depending on the nationalities employed and the flag state of the vessel. Technical management fees, which cover the shore-based team that manages the vessel's maintenance schedule, procurement of spare parts, and regulatory compliance, run between $3,000 and $8,000 per month. Hull and machinery insurance, which covers physical damage to the vessel itself, runs between $500,000 and $2 million per year depending on the vessel's age, value, and trading area. Protection and indemnity insurance, known as P&I, covers third-party liabilities including pollution, crew injury, cargo claims, and wreck removal, and typically costs between $300,000 and $1 million annually for a mid-size vessel. Stores and lubricants, which include the consumable supplies needed to operate and maintain the ship's engines, hydraulic systems, and deck equipment, cost between $150,000 and $400,000 per year. Planned maintenance and repairs, which include the routine work done at sea by the crew and by contractors when the ship is in port, run between $200,000 and $600,000 annually for a well-maintained mid-size vessel. Dry docking, which is the mandatory periodic haul out of the vessel from the water for inspection of the underwater hull, propeller, and rudder, occurs every 2.5 to 5 years depending on classification society requirements. A full dry dock on a mid-size container ship costs between $1 million and $3 million per event, including the cost of the dry dock facility, all whole work, painting, repairs, and surveys. Asterisk fuel. The cost that can bankrupt a shipping company. Fuel is not part of OPEX. It is the single largest item in VOYEX, and it deserves its own section because it is the cost that dominates the economics of shipping more than anything else. Cargo ships burn a fuel called bunker fuel, also known as heavy fuel oil. It is a thick, viscous, low-grade petroleum product that is cheaper per ton than automotive diesel, but which ships consume in quantities that make the total bill staggering. A Panamax bulk carrier burns approximately 30 tons of fuel per day at normal operating speed. A large container ship burns between 100 and 250 tons per day. With bunker fuel prices running approximately $600 to $650 per metric ton in mid-2026, a single transatlantic voyage from Newark to Rotterdam taking 9 to 10 days at 120 tons per day costs approximately $780,000 in fuel alone for that one trip. For the largest container ships running at full capacity, annual fuel costs can exceed $100 million. Fuel accounts for between 35 and 60% of total voyage operating expenses depending on route length, vessel size, and current bunker prices. This is why slow steaming, which is the practice of operating ships at significantly below maximum speed, has become standard practice across the industry. Reducing speed from 25 knots to 20 knots can reduce fuel consumption by up to 30%, saving millions of dollars per year at the cost of longer voyage times. Port fees add another significant layer to voyage costs. Entry fees, pilotage fees for the harbor pilot who guides the ship into port, tug assistance fees, berth rental, cargo handling charges, and terminal fees collectively run between $50,000 and $300,000 per port call depending on the port, the vessel size, and the volume of cargo being loaded or discharged. Canal transit fees are among the most dramatic single costs in shipping. A Panamax bulk carrier transiting the Suez Canal pays in excess of $300,000 per transit. The Panama Canal charges similar amounts. For vessels making multiple canal transits per year, annual canal fees alone can exceed $1 million. Asterisk the revenue. How much does a cargo ship actually earn? Revenue in the shipping industry is calculated using a metric called the Time Charter Equivalent Rate, or TCE, which normalizes earnings across different voyage lengths and conditions to give a daily revenue figure that can be compared across vessels and market conditions. In 2026, TCE rates vary enormously by vessel type and market conditions. A large container ship in the 15,000 TEU range operating on the Asia to Europe route earns a daily TCE of between $40,000 and $120,000 depending on market conditions. During the pandemic-era freight boom of 2021 to 2022, daily earnings for large container ships exceeded $200,000. Current 2026 rates have moderated significantly from those peaks but remain historically elevated compared to pre-pandemic norms. A Panamax bulk carrier in 2026 earns a daily TCE of between $10,000 and $30,000 depending on whether the Baltic Dry Index, which is the benchmark measure of bulk shipping rates, is in a strong or weak cycle. The Baltic Dry Index is notoriously volatile, having ranged from under 500 points during the pandemic lows to over 5,000 points during the commodity boom. A mid-size crude oil tanker earns daily TCE rates of between $20,000 and $60,000 depending on crude oil trade volumes and tanker availability. Now let us run the actual profit and loss numbers on a concrete example that makes all of this tangible. Consider a Panamax bulk carrier with the following 2026 profile. Purchase price of a 5-year-old vessel, $35 million. Financed with 20% equity of $7 million and an 80% ship mortgage of $28 million at 6% interest over 12 years. Daily mortgage payment, approximately $8,500. Daily OPEX, approximately $7,400. Daily fuel cost averaged over a typical voyage pattern, approximately $11,000. Daily port and voyage costs averaged across the year, approximately $3,000. Total daily costs, approximately $29,900 per day. Current daily TCE earnings for a Panamax bulk carrier in a moderate market, approximately $16,000 to $22,000. In a moderate freight market, this vessel is losing money at the operating level. This is the harsh reality of shipping economics that most people never see. The industry is cyclical, capital-intensive, and sensitive to global trade volumes in a way that makes it simultaneously one of the most profitable and most treacherous businesses in existence. In a strong market with Baltic Dry Index above 2,000, the same vessel earns $25,000 to $30,000 per day, producing a daily operating profit of $5,000 to $10,000 before debt service. In a very strong market at 3,000 or above, daily earnings reach $35,000 to $40,000 and the vessel becomes highly profitable. The companies that win in shipping are those with the financial strength to survive the weak cycles and the operational efficiency to maximize profits during the strong ones. Asterisk how ordinary investors can access shipping economics in 2026. Asterisk if you cannot afford $35 million for a used bulk carrier. There are 3 legitimate ways to access the economics of cargo shipping as an investor. The first is through shipping company stocks. Publicly traded shipping companies including Zim Integrated Shipping Services, Star Bulk Carriers, Danaos Corporation, and International Seaways trade on major American stock exchanges. When freight rates are strong, these companies generate extraordinary cash flows and often pay substantial dividends. Star Bulk Carriers paid dividends representing over 15% of its share price in strong market years. These investments carry significant volatility and cyclical risk but offer direct exposure to shipping economics with an investment as small as $100. The second is through shipping ETFs. The Invesco Shipping ETF and similar maritime-focused funds provide diversified exposure to the shipping sector across multiple vessel types and company sizes, reducing single company risk while maintaining the industry exposure. The third is through ship tokenization platforms. A small number of maritime investment platforms, including ShipFinex, are developing mechanisms to allow retail investors to purchase fractional ownership stakes in commercial vessels through tokenized asset structures. This is an early stage and relatively unproven market, but it represents the direction the industry is moving as it seeks to broaden its investor base beyond institutional capital. Now here is the honest conclusion that this video demands. The cargo ship business is one of the most capital-intensive, cyclically volatile, and operationally complex businesses in the world. The same ship that earns its owner $85,000 per day in a strong freight market is losing money in a weak one. The same company that paid $500 million in dividends in 2022 may generate minimal returns in 2024. Ocean freight carries over 90% of global physical trade. The ships that move that trade are the physical backbone of the global economy. Every product you have ever bought that crossed an ocean arrived on a vessel owned by someone who understood these economics deeply enough to invest in it. Understanding how it works does not mean you need to own a ship. But it does mean you can make intelligent decisions about whether and how to participate in the wealth that global shipping generates, even from the smallest starting point. Now before you go back to your first comment. What number did you guess it costs to build a cargo ship? How close were you? Drop your updated reaction below. I check every comment on this channel. If this video gave you a genuine economics education that you could not have gotten anywhere else today, give it a thumbs up, share it with one person who has never thought about where the things they buy come from, and subscribe to Rich Habits. I will see you in the next one.